All right, so welcome to another video. Today what we're going to do is we're going to go ahead and take a look at how to trade $100,000 worth of iron condors the right way. Now, if you've seen one of my other videos in the past, we're going to talk about that in a second, but in this episode, we're going to really look at doing it the right way. Trading a larger account, way different than trading a smaller account. So all the things that I mentioned here, it's not a recommendation to buy, sell, or trade anything, just my opinion and give you some thoughts and things to think about as you get into this. Now, there's a video in the past that I made right here, making $100,000 a year with iron condors. Is it possible? So the question is it possible? How could you do that, right? And yeah, it is possible. It's just you might do it a little differently. But this was just a basic overview of a breakdown. So looking at it just as a glimpse, you know, I don't usually make advanced videos on YouTube. They're much more basic. A lot of the more advanced things that I handle are usually in the coaching sessions, because that's where I deal with people. We work one-on-one. So if you want to work one-on-one, single video coaching session, or work 2 to 4 weeks together or 6 months together, check those links out on our website and we can get into it. So here I'll give you a little glimmer taste of kind of what it's all about, looking at really spreading out your risk and capital. So we're going to go ahead and take a look at just some basic paper. So a lot of people, what they do is they trade an iron condor. They go ahead and let's say they put on like 20 contracts, boom, and there's your $100,000 iron condor. It could be 200 contracts. It could be 2,000 contracts, depending on the size of the stock that you're dealing with. But really what you want to do is as you start spreading out your capital and risk, what you'll do is you'll spread out other iron condors amongst there. And you'll have some iron condors that are overlapping at different price points and some over here and some over here. So you're spreading out your iron condors all over the place. So that way, anytime price is moving, you're creating a much smoother risk picture. Okay, so that's the way you do it. And that's the smarter approach. So let's go ahead and kind of give you an idea of how this works. I'm going to go in and show you this example on, what do I want to do? I want to go ahead and do maybe, let's go in, I'll go with Amazon. Why not? So I'll go in. I don't have Amazon on here, so we'll go with Amazon. And I'm going to do this with verticals, so hopefully that's okay, but you could do it with iron condors. And here's the chart of Amazon. It's starting to go up. So let's say this market's been going down, down, down. So what I would do, and this again is spanning across maybe 3 weeks of time. Okay, it's not one day. It could be 3 weeks, could be 6 weeks, could be 2-3 months, you know, depending on my positioning on things. So I might start out with things like here at the let's say 30 days out, and I could say, okay, well, let me throw in a few verticals over here, and I'll go ahead and throw in a vertical there. Okay, boom, there's one vertical. Okay, later on, I'll go in. I'm just going to start putting in some trades in here for you guys. So that way you can kind of see the approach. So here's Amazon right there. There we go. So there's one tad bit of a Amazon trade, and I've got right there, a baby vertical, right? So I'm throwing in a little bit here, and then I might throw a few more trades over here. Again, this could be a week later. It could be a few days later. It could be a few hours later. My point is I'm spreading the capital, and I might say, hey, look, it looked toppy. I'm going to go ahead and throw a few more contracts in there. Okay, cool. And then I'm going to go ahead and maybe a week later, go in, throw a handful of more trades in here. So I'll go in, and then I start trading a little bit larger. So I got like maybe 4 contracts here. Okay, then I'm going to go in. Again, could be a week later, could be a few days later, you know, could be 3 weeks later. Throw in a few more over here. Okay, and then I'll do another one maybe over here. Sell vertical. There we go. Sell a few more over here. I'm just building out some inventory just to show you the basic process. Boom, we'll sell some here. Okay, stock price, let's say, goes down a little bit more. I'll sell a couple more over here. Okay, continues to maybe move up. I sell some more over here. Okay, sell a couple more over here. Boom, sell a couple more over here. Okay. Just another one over there, you know, and all these were slowly kind of aiming to get a little bit filled here. And then again, stock price goes up, so might sell some more on the vertical side. On the call side, I might sell 3 over here, and I'll sell some more over here. You know, sell 4 over here, And you can see I'm starting to build inventory. It's going to start looking messy for some people. But this is what you do. You spread your capital across a couple different weeks. It's not just on any single day or time. It's just, you're mixing out your capital all over the place. So that's really what I'm doing is I'm looking at really just spreading stuff out to be able to make sure that my capital is distributed in different spots at different points at different levels. So that way, not any single trade or iron condor will kind of burn me. All right. So that's all I'm looking to do. Look, boom, boom. There's getting more filled here. There. Okay. There's another vertical. And let me just show you kind of where we're at now. Okay, so take a look at all this inventory I've got all these verticals here, there, and if I change the expiration to go here, look, it's all over the place. Okay, and if I was doing this kind of more across a couple of weeks, all these would be spread out. So why would I do something like this? It's basically that now I've got this over here, this over here, this over here, this over here, this over here. I'm spread out. So when this pulls back, this one might get in trouble, but these are okay. Or this gets in trouble, these are okay. So the same thing on this upside. So I'm looking to kind of spread those things out. So this way, not one thing gets into any big trouble. And now at the end of it, I'm kind of looking at what's my delta, gamma, theta, and vega. And this is how you continue to spread out capital. And you can see I'm getting more filled, and it continues to just kind of keep adding to that position. So now this isn't anywhere close to the full allocation you really were looking for in, let's say, $100,000 worth, but what you're doing is you're starting to build more and more capital into this position. And now you've got things spread out. So why would I trade 100 or 500 contracts all at one point? I'd rather spread that out a bit. So that way things are all over the place to be able to not get into any single big trouble at any given point. So that would be my objective. And this is the approach you could take, is if you're trying to really spread out $100,000 worth in iron condors, go ahead and spread them out. Go ahead and mix them up. And that way, you're spreading your capital at different points, at different levels, and it's really eliminating a lot of the price risk to be able to really just putting all your money at any single one big, massive iron condor. This will spread it out at different times, different points, different areas, and you'll be much more at peace, I think, with something like this. Anyway, it is more complicated. It is, management wise, takes a little bit more effort to dealing with it, but it will spread you out a bit from a risk standpoint and make it trading more reliable to some degree. So anyways, I want to share that with you to open your mind up a little bit and your eyes to show you, hey, there's much more to it than just putting on one big trade and making money from it. You might be making it from all sorts of different little trades from a big compartment standpoint. So you've got this one big vehicle you're trading, could be Amazon, but you got a lot of other things going on with it. So all right, if you wanted to get some more insight on this, definitely subscribe to the channel. You could also book a one-on-one coaching session. We can mastermind some things together if you like. And I can even work with you for 2 to 3 weeks if it's something you want to do, and get you going on really ramping up your knowledge and education. So thanks for joining me. Enjoy the rest of the week ahead. I'll see you next time.